Happy Wednesday, everybody. Sorry for the delay, but here we are. We're at the middle point of the week, and next week we'll update the markets on Wednesday also. Next Monday or Tuesday, one more set of Jewish holidays. Let's recap last week's action so far this week and even a bit of today. Then we'll talk about what's left this week and watch what we'll be watching. So let's start on 2 Mondays ago. Last Monday, the 3rd of October. Just to be clear on that, stocks gapped higher at the open to start Q4. European stocks, acting in reaction to the UK walking back some of their spending and tax plans, were on the move up, so the U.S. markets followed. There was some supportive U.S. eco data in the ISM headline number, and the S&P 500 was up over 2.5% on the day. Would it surprise you if I told you the Dow and NASDAQ also up about 2.5% on the day? Remember that algos thing, running this thing? Stuffed shirts on TV starting to salivate, and they're dusting off the recovery playbook. The move higher continued on Tuesday as the Reserve Bank of Australia raised rates less than expected. A pivot in the land down under? Don't know. Let's see what happens. JOLTS report came in way below expectations, so maybe the labor market is cooling. Still about 10 million job openings, about 3 million more openings than people are looking for work, but it's heading in the right direction. S&P up just over 3%, NASDAQ up 3.34%, and the Dow up 2.8%. Two-day run that had the FOMO people shaking. Did we miss the boat? As I told you last week, Wednesday was Yom Kippur, and it was the slowest trading day of the year, or one of the slowest trading days of the year. Plenty of volatility to report, but overall, if you just looked at the closing numbers, Dow, S&P, and NASDAQ all down 0.25% or less on the day. Should we put the recovery playbook away again? Selling picked it up again on Thursday. COVID's back in China. Lockdowns are probably coming soon. The Fed head parade continues, and they're still on the same page. Fighting inflation by raising rates until they're not. Stay tuned. We'll see how that goes. Dow down about 1%, S&P also down about 1%, and the NASDAQ down a bit over 0.5%. Labor report was the one everyone was watching, and it did not disappoint. The report was a bit on the hot side, so that is not what the market wanted to see. The Fed is hoping to see labor markets cool, not heat up. Stocks gapped lower on that, and we added in an earnings miss from a big semiconductor company, Advanced Micro. All of the averages closed out the week in the red for the day, but did manage a positive week. Bad news first. Always like to look forward to the good news. For Friday, the Dow was down just over 2%, S&P down just under 3%, and the NASDAQ was down almost 4%. Good news for the week, NASDAQ held up 0.75%, the S&P 500 was up just over 1.5%, and the Dow was up just over 2%. Nice to see green on the screen for a change. The weekend was full of geopolitics and talk about the labor markets, but no news. Monday, that is 2 days ago, the 10th, stocks opened with cautious gains as you had some big names throw in their 2 cents. Investing legend Paul Tudor Jones spoke about the Fed challenges, and JP Morgan's Jamie Dimon replaced his hurricane remarks from last quarter with a call for a likely recession in the coming 6 to 9 months. There was a brief exhale when the headline that Russia was willing to engage in diplomacy, but the traders faded that and the market bled lower into the close. Dow down 0.25%, S&P down 0.75%, and the NASDAQ down 1%. Yesterday, Tuesday, the market gapped lower at the open, shrugged off positive news in the Small Business Optimism Index. Focus went back across the pond, and the Bank of England reacted again to the moves in the gilt. There is concern about the policies from the BOE. That weighed on the market as the gilt yields blasted higher. It took U.S. yields higher as well, and that took stocks to close near session lows. The Dow eked out a gain, up slightly. S&P 500 down about 0.5%, and the NASDAQ down about 1%. This morning, Wednesday, we had the PPI come out, and as everyone described it, nothing good was in the report. At least if you're looking for peak inflation, peak hawkishness. So the positive look on the pre-market went away. The market opened slightly lower. It's pretty much back and forth between positive and negative. We'll have to see what the rest of the day brings. At 2 o'clock today, the Fed minutes from last month's meeting will be released. And since the Fed heads have all been talking, all on the same page, and a lot, I don't think you'll see this as news, but we have been surprised before. The rest of the week is like this. Tomorrow, Thursday, CPI, and certainly after today, there is no expectation of anything but a hot number. Jobless claims are also tomorrow. We're still watching for labor market to cool. Friday is retail sales, and this is going to be telling one, so watch this one. University of Michigan survey of sentiment and inflation expectation has been a big mover in recent weeks also. And between now and the end of the week, we'll hear from a gaggle of Fredheads: Kashkari, Barr, Bowman, George, Cook, and Bullard. But unless they start changing their tune, they will not make news. I'll be back on Friday with a planning video, as well as next Wednesday, again, with a market update video. Please be in touch. Let's talk about how these market actions affect your planning. Have a great week.